Hi, happy morning, all. Let's start the session. Let's kickstart the session of mastering the candlesticks real-time application simplified. So we are going to learn the basics and the tweaked tricks of candlesticks today. Simple concepts, but which are the powerful patterns of the candlesticks? How we use, what needs to be done. We are going to learn. From the start, I am Raju Angadi Vishwanath, as SEBI registered research analyst, chartered market technician, and a certified financial technician from MTA US with 15 plus years of experience I work as a consultant in the mid-sized brokering firm. In fact, I work with a couple of companies. My main expertise is price action, Elliott waves, and building the real-time trading strategies. So that's a brief about me. What would be the agenda? What would be the matter of the session here? Origin, where did the candlesticks originated? Mechanics of candlesticks. We are going to understand the behavior of candles. Smart zones of confluence we are going to discuss, where the key zones and the points needs to be addressed. The power of candlestick patterns to trade, the power candlestick patterns, which are limited patterns, which one needs to trade, trading strategies using Steve Nison wave. Also, we are going to discuss. So basically, in the 17th century, Osaka was the capital of Japan. Guy named Homa or Honma Muneshiya Homa, one of the wealthiest families, guy who was called the god of markets, has started trading the rice markets using the historical data and the candlesticks in 17th century 1724 and started trading in 1750. Rice trading exchanges was the origin of candlesticks. So there the candlestick started from Japan. Read the market's historical price behavior. He used to do it using those patterns. So that's a brief history on the candles, a small history. What's the mechanics? Basically, the candlesticks were used in the 17th century because there was a war terminologies. Lot of war terminologies have been used. The psychology of wars were used for the markets. The supply demand zones can be easily understood using the candles. So that's where the importance of candlesticks arise. Hope I am not boring anyone. The reason is we need to know the history. Obviously, it is required. The history is required to understand what candlesticks needs to be used, how to use it. So we are understanding the war terminologies where the candlesticks are used. So where the supply and demand zone. So this is a bank nifty chart. What we are seeing, a simple right to left chart. We are seeing it here, where the more number of points meet, more number of points connect, and a key reversal zones and the areas. So where near the support, if we see the hammer kind of a pattern, the supply demand zones we have marked it here. Basically the bank nifty chart. I'm going to mark it on the live charts also, live charts. We are going to be live as well. So I'm just showing it to you here, how from right to left, where the areas, the key areas, the price behavior has happened, and how it is acting as per the price zones is what we are seeing here, the supply demand. So what happens, the behavior here is supply demand is the key areas, the zones of confluence, what we call from right to left. When you see where the more number of points meet, that becomes the area of supply or demand. The support and resistance, what we call, we are going to see where the buyers and sellers fight. The main idea behind the candlesticks is it's a fight between the buyer and the seller. Any candle is formed where the buyers gain the upper hand, the green candle is formed, and the sellers gain the upper hand, the supply is more, the red candle is formed. So this is like a war field. When you fight and push, the pressure is on the buying side, so buyers win, that moves up. And here the sell is, we are seeing it here. See guys, this is the area where the buying pressure was inserted and the bull candles were formed, and this is the area where clearly the selling pressure is inserted, and the supply is more here. Here the demand is more. That is what we need to understand. I'm going to use the tricks and share the tricks as well going ahead. So no need to worry, just we are understanding step by step here going ahead. The supply zone and the demand zone, one needs to understand from right to left how we are seeing. So let me come to the charts of same bank nifty chart. I'm going to come into the similar way. What is happening here? So the channel what we are drawing here showing the area of confluence. So this is kind of a what we call it as a bear flag, or kind of a rising three methods. Sorry, falling three, where the fall has happened, the consolidation, the next leg of fall has started. So this is how the areas of confluence. Now we are going to see the important points where the more number of points connect, which we have discussed in our session of art and science of using the stop loss. Using the candles here near the candle, see the multiple shooting star kind of a candles have occurred here. The consolidation breakdown has happened here only, and the channel resistance was taken with the candles. What we need to use, where the candle occurs is the area, the zone we have to mark. The understanding of the area where the candle has occurred becomes an important zone of confluence. So this is the area where the bear flag or a bearish pattern was formed, and below the pattern occurred the move on the downside we have seen. Once the bear pattern is formed, so that's how one need to understand the pattern and act accordingly. Where the area of confluence is marked, any chart you can name it, where the area of confluence one needs to understand and mark. See what happens here. Again, the same area where the support was taken, the hammer candle has formed and the bounce has come. And similarly, once the area of confluence breaks, the zone marking process, we are seeing the area of confluence, the price action area of confluence. Hope you are seeing the screen. Let me come to the chart back again. Okay, now the screen is clear. You are seeing the charts, I believe so. So we are seeing the area of confluence and the zonal area where the price has occurred here. The important points where the Nifty recent chart we are seeing it here, how we are planning to understand the candles here going at the behavior is understanding the supply demand zone. The main idea here is to understand the supply and the demand zones. Clearly we are in a lower trending channel which is showing on the downward bias. So that's what is happening. The downtrend has started and it started continuing, and we are not out of the woods until the trend on the 24,440 is broken on the upside for the Nifty. We are not out of the woods. The candle with the simple price action is what we are seeing. We are not, we have a one simple moving average, and the candle what we are seeing it here, that's the area of confluences what one needs to understand. So basically coming to the bank Nifty part of it, similarly a bear rising three methods or a flag kind of a pattern, bear flag occurred and the price has broken down in the banks, and the continuation below the next support 50,400. Now the bearish action would continue in the bank Nifty is what we see. These are the recent charts what I'm sharing. Side by side, we are going to start the same with the charts. So the same bear flag which has been marked in the bank Nifty at the resistance or at the support, at the supply zone or the demand zone, which of the candles get formed adds the significance to the trading. See, it's all the main areas of confluence what we need to understand. Fear and greed is what determines the markets, the buyers and the sellers fight. We are going to learn one simple pearl box method. Like what happens here in fear and greed. In a greed, we buy something at the top where the top was occurred in the Nifty, and the fear we sell at the panic bottom. Maybe we are not in a bottom, but still we are entering the bottoming up zone in the markets. Some more correction is due. Any some rise can occur before the correction. Though, see, this is one simple pearl blocks method where the buyers and sellers. What happens in a box? I have dropped 100 pearls, or let us say it is in a simple way. There are 100 traders in a box. So box consists of 100 people, and they are buyers. Similarly, on the right hand side, we are seeing a box where there are 40 of them as the seller. So the pressure on the buying side, and it's once the box is full, it has to shift to the selling side. So from buyers to sellers, sellers to buyers, it has to shift. That's how it becomes a zero sum game in the markets. So what happens? Why do we need to understand? Obviously, when there are too much of a buying spree, it reverses from that zone, and similarly, too extensive selling when happens in the markets. When the extensive selling happens, the sellers would be many in the right side of your box, and the demand arises from there. So that's how the conjunction in the markets happen. Now let's have a viewpoint. I am going to share the important patterns of the candles which one needs to use, where the results you will get at the end of the session. So bear with me till then. So what we have discussed here, support and resistance. The areas of demand is the support, the areas of resistance is the supply zone. See, we use the unconventional way of trend lines. We are marked the trend lines here. What it is like TDL is the trend line. What we have marked the from the second top, lower top or higher bottom, we have marked the trend lines, and where the more number of points connect, where we get the result zone. See, this is historical, you might say real time. If you use it in the application process, you will get the results to entry and exit points of your trades. So that's what is the key, where one can understand and act accordingly in the trading. See, unconventionally in the trend line 4, we are drawn and we have got a earliest exit, and candles is hinting that multiple shooting star candle patterns have occurred here. Understanding the candles, we are going to learn the patterns where the key, we are using the horizontal support resistance, we are using the trend lines, we may use some of the moving averages, and near those points, which of the candles occur, that gives you the rules to trade the candles also I'm going to share. So moving averages, any different moving averages we can use. There are 8 powerful candlestick patterns, Morabuzo or belt hold, where you will get the big results and where the buyers are huge. Then there are 3 white soldiers, 3 black crows, and how to use these patterns. Rule of 2, engulfing, umbrella pattern, which occurs near the supply or a demand zones, higher high, lower low patterns, high price, low price, gapping play patterns, which are the important patterns to trade in the candlesticks. For the short term traders, these are the very, very important points. The minute adjustments with the confluence zones one needs to understand. So what we are seeing it here, bullish and bearish bell told candles, where the sudden pressure from the low levels buyers force. Once these candles are formed, what needs to be done? Bullish bell told or bearish bell told. We call it as a Morabuzu candles also, where there is no shadow on the downside and very limited upper shadow, and the body of the candle is very strong. So the buyers have pushed the prices higher in a strong note. So what can be done? Once this candle is formed, if any consolidation happens and the breakout happens, you everybody says you have to adjust your stop loss below the candle and buy. But what I'm saying, below the 60% or 70% of the candle, place the stop loss, take the entry and take the trade, because this would be a big candle where the price happens to be on the zone of range, where the range would be big. So adjust your stops accordingly. These are the powerful candles where it displays the behavior of strong buying or displays the behavior of strong selling, where the bullish bell told or Marabuzo occurs. It's a strong buying is witnessed, and the buyers exert the pressure. Prices are more likely to go up once these candles are formed. It is one of the powerful patterns even to trade intraday on a 15 minutes time horizon. Morning first 15 minutes, this candle happens to be true, one can take the trades for day trading. Morabuzu, bearish bell told similar way, the similar patterns occur. So let's find the bell told candles here. This is a hourly chart. Let us see even on the 15 minutes chart. See, the first candle of the day, gap up, then the bearish bell told candle occurs on the 24th. How we have seen the bearish bell told once the reversal and the candle high or 80% as a stop, it has not crossed it. From then the continuation has clearly occurred with the bearish bell told. See, this is the three bearish candles, three black crows. I'm going to share those patterns as well. Now the three white soldiers and three black crows. When the three strong candles occur, then some consolidation happens and the rise would continue. Once the high is broken, one can buy. This is an example of Reliance Industries where the three white soldiers have occurred and then the consolidation, then the rise again. The same way, three white soldiers would give you a strong trend and the continuation of the pattern. Similarly, the three black crows. Let me come back to the charts again. See, this is an example of a three black crows where usually the continuation and the consolidation happens and cracks in the markets are seen, but here a very little consolidation happened and the fall has witnessed. Usually this kind of pattern occurs and determines the strong trend of the continuation. Here one more similar way the similar pattern has occurred. Let us see the shooting star with the three black crows, then a consolidation, then the fall, the confirmation of the low is broken. We are taking the trade here. The stop loss could be above the consolidation range and the continuation of the pattern occurs and the trade has started moving down. The big trend is what we got above 54,200, 170 below. Once we got the sell, well, the stop loss was 54,300, 150 point stop, and we got an exit near 52,200, 2,000 points. The risk reward ratio is beautifully favorable. So I think this would be one of the good trades. The hint was given with the three black crows. So usually using these patterns, we are going to get the good results when they occur. The highly likely tradable patterns which gives us the results only I am sharing and discussing. It's not that there are many other patterns as well in the candlesticks, but I am discussing very few patterns which works, which are there. Like here again in the Nifty, this is a 2-hour chart of the Nifty. What we are seeing, the three black crows, then the consolidation, then again the fall was witnessed. So these are the powerful patterns which occur, power day trading patterns. Let me get back to the. We have learned the Morabuzu belt hold, three white soldiers, three black crows. What it is usually 50 to 60% of it should not be retraced. More than 60%, 70% if it retraces, then the power of the trend will go 50 to 70%. Three white soldiers happens, then 50 to 70% if it retraces, then the power of that trend will be reduced. Similarly, three black crows occurs and power of 50, usually 50% I call, but up to 70%, even if it retraces and if it closes above 50%, I would say the power of the trend is gone. Always never depend on a single candle. Rule of two, what we call. Never ever trade the candlestick with the single candle. So that is very much important. Engulfing is the previous candle which is completely engulfed, is what we call as the engulfing candle. Umbrella pattern, engulfing pattern, and higher high and lower low candle techniques I'm going to share. Let's get into the charts again. See, what do you call it as engulfing here? What happens in this chart? Basically, what happens? We are seeing the three candles here, 1, 2, 3. See, what is the understanding here? The three candles are engulfed in a one candle. The three candle move, the time what it has taken for to move in three candles has been retraced and engulfed, and it has closed below this candle. So this shows the power of sellers. When the three 15 minutes, like 45 minutes it took to go up, and it is engulfed in 15 minutes, means the power of the trend is strong. That gives us a signal to enter the sell. Hope you are getting my point. How we are using the three candles, how it took to rise has been engulfed in a one candle. That's what we call it as a engulfing. Umbrella pattern is the shooting star or a hammer pattern which occurs. Basically, the shooting star or the hammer pattern when occurs anywhere near the bottom, we call it as umbrella pattern, but we have to use that pattern usually with the confluence, with the conviction, with other patterns, with the rule of two. Only single candle, we, if a shooting star has occurred or a hammer has occurred or a hanging man has occurred, we should not see. Here we got it, but later on we saw a bottom, the hammer pattern has occurred. That is what we call it as an umbrella. The engulfing, again I'm going to show you an example of engulfing. What is the power of engulfing? Why one can use the engulfing? I'm very powerful patterns only I am discussing here. See, multiple candles like around 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 candles almost. If I am counting from here, it will be more than that. Whole of this pattern is engulfed here in a single candle. Let me show it to you. This whole pattern is engulfed in one single candle. So that shows the strength is completely turned on the downside. 80% of it would be the stop loss and enter the trade with the same candle. Even not the high of the candle is required. 80%, if it retraces, then the strength of the trend will be felt. So this gives us clearly a signal where A complete consolidation has been broken down. The candle pattern, one candle is engulfed with the multiple zones. Here we have seen an umbrella pattern, which we call it as a hanging man. But along with that, the confirmation of the bearish belt hold gives us a hint to act upon to sell. So basically, if we even sell near 24,350 in the Nifty, 350, 360 breaks once we sell. In the next candle, once the around 345, the stop loss would be 420 odd levels. Let us say 410 to 420 levels. So 50 point stop loss, how much we would have gained? Let us say even if we exit near 24,130, so 230 to 250 points would have gained if a simple candle pattern would have been understood. That's what one needs to understand while trading. The power of understanding the patterns is very much important. Umbrella pattern we have discussed with the engulfing pattern. Now we are going to see the higher high, higher low. So continuously what is happening in the market? Market is unable to close above the previous day's high. Here we saw only one candle above previous day's high, close one or two candles, then again continuously. Now we are seeing the sequence. See, this is the sequence. Any candle which is closed above the previous day's high, here it is not closed above the previous day's high. That is the magic. Here also it's not closed. Continuously from here where it started, this whole trend, nowhere we are seeing the candle has closed above previous high. Guys, it's very simple. Till here it has not closed a single time. Once the close above previous period high is seen, there the pattern occurs and the momentum gains, reversal is seen. Until then we are clearly selling every rise. Until the previous day's high above is closed, the trend can be written higher high, lower low. Similarly, here we are continuously seeing from here the trend starts. Never we have seen a close below previous low. The continuation has occurred. It does not close below this low. Here we saw the close, one can exit. Simple technique. Again, here it starts the trend above the previous high. So this until it closes below the previous low, the buying spree has continued. The reversal has occurred here again. Once it closed below the previous low, the momentum has started waning. Higher high, lower low is a simple technique which one needs to understand in the candles. One of the powerful day trading pattern I'm going to share with you. See, before that we are seeing a three black cross, how the pattern occurred, and then the consolidation happens and then the fall starts. This is a trade what one can do with the low price gapping pattern or a high price gapping pattern. Once the gap down happens, as the markets are trending down, we have to understand how the trend happens to be, and once the bearish candle occurs, the continuation usually happens with the gap. So with the gap above as the stop or 80% of the candle as a stop, this is one of the continuation patterns. Once the bearish candle is there, consolidation happens, then the gap down happens. One can trade with these patterns in a very effective manner. Similarly, the same time after a bullish note continuation happens, then a gap up rally starts with a large candle. Those are the stocks which one need to trade in a high price gapping pattern. Here is a high price gapping pattern. Once the gap up has occurred, the consolidation was happening on a rise, like what we call it as buy the prices which are trending higher, buy higher and sell more higher, sell lower and short sell lower, and then again recover, cover your shorts much lower is the methodology here. High price gapping and low price gapping pattern. See again one of the examples of Reliance Infrastructure where the patterns of low price gapping play as shown and given the results in a very good manner. Once this pattern occurs, these are the high probability patterns even on a daily chart, or even if you consider it on a intraday. This is one of the important patterns to trade. See, upside gap Tasuki is once a gap up has occurred, the gap would be filled. Similarly, downside gap Tasuki. So these are the few candle patterns which we have discussed. If I'm going to share a 5 minutes of time, if you can bear with me, on our upcoming price action workshop on the 23rd November and 24th November. Very exciting offer. 5 minutes, bear with me. Then I'm going to take your questions on the candlesticks, what we have discussed, the small simplest of the techniques what we have discussed with the real-time charts where the results would yield. There are much more techniques and much more powerful insights. So in our price action workshop, it's a 3-in-1 workshop. What we are going to learn, particularly the precision price action, and in a live trading room where I am going to explain every day 30 minutes, like around 10 minutes slot would be there about the market trends. And as I am a SEBI registered research analyst, I'm going to give you the advice. So 1 month live trading room you are going to learn. Bonus, you are going to get 1.5 months. As if you start now, let us say 2 months, you are going to get a live trading room and the advice for a 2 months, as we are going to give the research reports and the trade advice. As I am a SEBI registered research analyst, I can advise, and along with that, the price action workshop. So, what would be the content? Introduction to price action, we are going to learn support resistance with SR flip, supply demand zones, the areas of congestion, candlesticks, some part of it we have covered here. More of a candlesticks approach we are going to discuss. The price action zones, the zone marking process, smart confluence, PF clusters, the more on the Fibonacci and pivots, and how to use the smart confluence zones. We are going to learn 5 revamped stop loss mechanisms, your entry exit stop mechanisms, enhancing your winning chances where there is a high probability of success. Like we have discussed some of the candlestick patterns where there is a high probability of success. Only I have shared. There are a few more tricks and techniques which we are going to learn more in the workshop. This is a small part of the workshop what we are discussing here in the price action trading process. We are going to learn detailed process. We are going to learn again the flag limit model, fail to return theory, and different of the techniques. This is NPS price action. I'm going to share where the JCOM man price action strategy I'm going to share, which is one of the strategies who made a Japanese trader from 2000 to 2010 has made a billions of yen being a trader. How he planned his trades, I'm going to give a case study also. A bedroom trader, you can Google a JCOM man. So price action is the key to trading success, which I'm going to share the different techniques and strategies, how the gamma blast can be identified, liquidity spike model, and Takeshi's mean reversion strategy. who is called as a JCOM, and that also we are going to learn. We are going to identify the position sizing, RMT model, uh, risk enhancement model, goal setting, how to set your goals, blueprint of your trading plan, then how to become a successful trader and achieve the financial freedom. How many of you are ready to join now? I'm going to give you an exceptional offer to learn, earn, and prosper live trading room, precision price action workshop, SEBI registered advisory for a month, which would cost you 27,000. Weekly trade quest analysis webinar on the markets where the index analysis, you are going to learn practical aspects of trading. It's not just a workshop. Attend the live workshop 2 times in a year. Recording access would be there for a year also. Now at just 499, 4,999 plus GST, it's 5,000. Let's say you are going to put in, which would cost you 27K just at 4,999 plus GST is what you can contact our webinars team. So that's it. Thank you everyone. I have explained a brief about our workshop. Any questions, please feel free to ask. I would take up your questions. You can speak with me one-on-one, not only regarding the workshop, what we would be conducting on the candlesticks, what we have learned. I'm going to discuss with you guys. Any questions, please feel free to ask the questions. You can put up in the Q&A, else you can raise your hand and speak with me. So guys, what are you waiting for? The exciting offer is there for the limited period, the price action workshop plus live trading room plus SEBI registered advice, 3 in 1 at a price of not even 1. Join now, learn, earn, and prosper. We are going to get a hand holding support kind of a stuff with me. If you are joining, I'm going to help you become a great trader. If you have any questions on the candlesticks, what we have discussed and how to identify the key zones of confluence, please feel free to ask. Also regarding the same, and on the workshop also you can ask me. So basically, it's 5 minutes or 15 minutes one can use. See, the larger the time frame, what happens, your stop loss and the target should be, obviously the strength of the trend would be more in the larger, higher time frame. Similarly, but the timing needs to be used if you are day trading. Basically, shorter time frame needs to be used. 1 minute also it works. I'm not saying it will not work. Usually 5 minutes or 15 minutes can be used. 15 minutes would be too big for an intraday. So for a larger degree trend, you can use 30 minutes or hourly trend identification, and you can use the 5 or 15 minutes for your day trading. So that's, hope I cleared. Any more questions, please feel free to ask. You can raise your hand, or else you can put up on the Q&A box so that I can answer your questions regarding the workshop or even regarding the candlestick simple patterns and the behavior of the candles, what we have learnt. See, there is a minute simple information, though what we have learnt, so, but the application of it in an effective way at the clear zones of confluence would give you the greatest of results, even with the candles. So guys, another couple of minutes I'll be there. If you have any questions, please feel free to ask right up in the Q&A, or else you can raise your hand and speak with me. If you have any questions regarding the workshop, if you would like to join the much more powerful workshop, a price action workshop, SEBI registered advice, along with that, you are going to learn very important actions, or else you, even if you have questions on what we have learned here in the candlesticks, I'm going to discuss the points. Hope nobody has the questions. Shall we conclude the webinar? See, there are so many candlesticks, but I have discussed only like around the bell-toed candle, white soldiers, black crows, very few of them which are more accurate, like high price gapping play, low price gapping play. So only around 4, 5, 6 patterns I have discussed where the engulfing pattern occurs. So those candles, why the buyers and the selling pressure on a one side you will get. So when these kind of candles occur, that would be the point of confluence to take the trades. So that gives us the great results, that gives us the accuracy. Mainly the patterns which I have discussed here will give are the most accurate and most powerful patterns what one trades. Hope I have answered all your queries. If you are really interested to learn more of the aspects in our price action workshop, where the practical approach also we are going to teach, you can get in touch with our webinars team. That's it for today. Thank you everyone. Have a nice weekend. You have spent your precious hours time with a minute sharing of knowledge what I have done, the tricks and the techniques of the candles, mastering the candlestick approach in a simplified way, the accurate patterns we have discussed. See you all again. Until then, have a happy trading weekend and the forthcoming happy trading session and advanced happy Diwali. If you would like to learn more about the workshop, please contact our webinars team and you can get in touch with me as well. Our team will connect me so that we can discuss to know more what practically handholding and the support we are going to give you regarding the same.